Hello, I'm Bernard Hickey from Dec and welcome to our economic weather report, where today we look at December quarter GDP, total output for the economy, in the December quarter from the September quarter. It showed growth of 0.3% from the September quarter. Now that was half what the economists and the Reserve Bank were expecting. They were expecting about 0.6%. Also, September quarter growth was revised down to about 0.7% from 0.8% previously. So let's go and have a look at the chart, which you can see underneath the article here, which is underneath the video, to get a sense of what's happening with New Zealand's GDP growth over the last 10 to 20 years. You can see here we had strong growth through most of the 2000s during the housing boom. We did quite a bit of borrowing and spent it. Then obviously the recession here through 2007. We actually went into recession slightly earlier, 2008 into 2009. And then we've bumped around basically, not growing that fast since then. You can see up to 0.7 in the September quarter, down to 0.3 there. So it's time to look at what was going on within the economy. Why was it so weak? Well, manufacturing output actually fell 2.5%. That's partly because the New Zealand dollar is strong and it's difficult for us to manufacture and export to anywhere else apart from Australia, but also there was a late cull for many of the meat plants because of a lot of very wet weather. A lot of farmers have held their stock on their farms rather than send them to the factories, and that shows up in the figures. So you could argue there's some seasonal problems there. However, agriculture production, and particularly dairy output, up 3.5% in the December quarter. Those of you who are wondering what happened to our summer, well, all that rain through the summer helped our dairy farms, particularly in the North Island, and that boosted output and has helped in the GDP figures this time around. Also, retail and restaurant spending was quite strong in the December quarter. Remember, this is a follow-on from the Rugby World Cup, which of course happened at least partly in the December quarter. Up 2.2% in the December quarter, a follow-on from 2.6% growth in the September quarter. So the Rugby World Cup was a factor boosting growth. Well, that wasn't that strong overall. Also, finance, insurance and real estate services up 1.3% in the quarter, relatively strong. Real estate particularly strong. Obviously in some parts of the market, Auckland, we're seeing a bit of a rebound in the housing market going on. Unfortunately, a 7.8% fall in plant, machinery and equipment spending. That's quite a worry because we want our businesses, as we go into the recovery, to be investing in new plant and machinery. They're not doing it at this stage. And of course, government spending has fallen. So a 0.7% fall in that part of the economy as the government contracts its spending and tries to head back to a surplus by 2014-15. This is the big question for the economy. Can it cope with the government withdrawing the stimulus, which at some points was up to 10% of GDP over the last couple of years? Will the private sector pick up the baton? And what does it mean for interest rates for those people with money in term deposits or owing money to the bank? Well, the big picture at the moment of low interest rates for longer, this continues with this very weak GDP growth. There's little inflation pressure around, and the Reserve Bank is expected to hold the official cash rate well into the end of this year, maybe not until early 2013. And also, unfortunately, there don't seem to be that many structural changes in the economy. We're still pretty much a housing market with bits tacked on. And also, we have the high New Zealand dollar, making it difficult for our non-commodity exporters. You have to wonder if we'd have any growth in the December quarter without all that rain, without the Rugby World Cup. Now, what does this mean? Initially on financial markets, the New Zealand dollar fell about half a cent to 81.2 US cents, and there was a slight fall in wholesale interest rates. I'm Bernard Hickey. That was a special economic weather report from Dec Qtr GDP.